I'm Matt Kirk from toptraderthinking.com, and in this webinar I'm going to run through a few of what I call universal blocks or success thieves. Another way of saying it, I guess, is things to recognise and avoid like the plague if you want to actually be a top trader.
All right.
Universal blocks are the mistakes that many traders make time and time again that further distance them from trading successfully and profitably. These success thieves are some of the most common amongst private traders and have been developed from first-hand dealings with thousands of traders. Let's have a look at the first one. Some of these you might relate to as well. But I love the company. Have you ever thought about that? This relates more to stock traders, of course, but also traps many futures, commodities and FX traders.
All right.
So here's a quote. I often trade particular stocks because I feel I have some affinity with them. This doesn't necessarily translate into profits, as I get stuck in a trade and sometimes don't want to exit my position due to my feelings for the company. In fact, some of my biggest losing trades have been due to some weird love affair with a stock that kept turning more and more sour as I sat and watched over the course of several months.
All right.
What are the warning signs if you've fallen into that sort of trap? The emotions and feelings that you're going to have will be things like a false sense of security, a sense of loyalty and ego. The behaviours and actions that you'll demonstrate include lying to yourself, bottom drawing a trade, if you've heard that. Bottom drawing a trade means a short-term trade that now becomes an investment, i.e. a long-term trade because it's going against you. Now, what are the top trader thinking rules that you need to employ?
All right.
Number one, only ever enter a trade based on your trading plan and methodology. Stick to your risk-reward profile on each trade. Number two, when you enter the trade, place your stop loss immediately, i.e. don't keep the stop loss in your head, place it in your platform or with your broker. Number three, don't search for any news that supports your position if it's going against you, i.e. don't let the wool be pulled over your eyes. And number four, never say or think but the price should be or shouldn't be where it actually is. At the end of the day, price is where it's at, and if it's going against you and your stop loss is in place and you're sticking to your methodology, then part of trading is losing.
All right.
Here's another universal block. I'm so bored, I just need a trade. Any trade will do. Some of the warning signs that you're falling into this trap is boredom and, funnily enough, also loneliness. Trading is quite a solitary game, so if you're sitting in a room and trading and you're not mixing with other people, you're just staring at a screen, if no trades are coming up in your methodology, there is a temptation for some to just have a bit of a stab and take a trade. The behaviours and actions that you'll experience, I guess, are seeing trades that aren't in your system and then also gambling and punting just to relieve the boredom. So here's what some traders might say, and see if you can relate to this. When I was at work, I was used to a bit of noise, but now I'm at home trading, it's so quiet. Sometimes I sit here for hours and don't get any signal based on my system at all. At this point, I occasionally take a trade just to break the boredom, and so that I feel I'm actually doing something. I thought becoming a full-time trader would be different to how it really is. So, like I said, be aware, full-time trading can be a lonely business for some people. This can lead to punting and inventing trades just to keep interested.
All right.
The top trader thinking rules to assist you in not falling into this trap. Number one, ensure that your system fits with your personality and your life. Number two, get a trading partner to keep you focused and honest. Number three, keep a trading diary and practice the choice of discipline. So jot down every trade that you do and ensure that you're sticking within the system. Number four, take regular breaks from the screen to actually make sure you have a life and you're not just getting so involved in the trading that you can't see the wood for the trees.
Alright.
Here's another universal block, a fear of pulling the trigger. You may have said something like this: I do my charts and I know what I should do, however at the point of actually placing the trade, I freeze and then convince myself I should just wait and see what happens, as opposed to risking any of my capital. Now this is often as a result of having experienced a string of losing trades, which is going to happen. It's also if you're worrying the next trade will be a loser. Now this can be highly frustrating and debilitating. The warning signs that you fall into this trap include fear, weakness, and confusion. Some of the behaviours and actions will be an inability to act, i.e. take a trade, on what is a valid signal, and then also picking and choosing between trades.
Alright.
The top trader thinking rules for the fear of pulling the trigger include: number 1, take a complete break from the markets and step back for a while. That could be a week, a month, depending on exactly how bad the issue is for you. Maybe paper trade the next 5 signals to get your eye back in, get your confidence back a little bit. Or another way of getting your confidence back is just do very small trades. So scale right back until you feel more comfortable. Part of the reason that you may be fear of pulling the trigger and have a fear of losing is that the money that you're trading may not be purely surplus capital. So you've got to try and keep the emotion out of trading. Trading with money that you really can't afford to lose makes it all the more difficult.
Alright.
Alright, another universal block is analysis paralysis. You've heard of this one? And this is what traders can say. I thought the idea was to do as much research as possible, both technical and fundamental. Then, armed with a great deal of knowledge, I could trade profitably. The problem is, when I pore over news and charts, I don't know whether to buy or sell or hold, so invariably I end up doing nothing and miss a good trade. Analysis paralysis is probably most acute in the novice trader. You can't know everything, and sometimes knowing too much information can create, like I said, a situation whereby you simply don't know what to do. Now, some of the warning signs. The emotions and feelings will include things like confusion, the feeling of being overwhelmed, and apathy. And the behaviour, of course, will be the inability to actually place a trade, because you simply don't know what to do.
Alright.
The rules, the top trader thinking rules for analysis paralysis. Number 1 is keep it simple. Like many situations in life, I guess, making it complex can lead to confusion and the inability to act swiftly when required, which is all about trading. Number 2, be aware of fundamentals. However, don't get wrapped up in it so much that you can't make a decision. Number 3, maybe read less, not more. If you're subscribing to many different newsletters, or you're reading a lot of different commentary from different traders or websites or analysts, maybe pare that down a little bit. Develop your own simple and robust system and methodology for you and your account and stick to it. And number 5, 3 technical indicators I would suggest is probably enough. I've seen some traders who are looking at anything from 8 or 10 different indicators on the one chart, different time frames. Once again, too much information can basically give you analysis paralysis.
Alright.
I'm Matt Kirk from toptraderthinking.com. Thanks for joining me, and I look forward to the next webinar.